Good evening, everybody. How are we doing today? Hope everybody feels great. It is Wednesday, November 8th, 2023. This is Beat the Market Maker with Steve Morrow. I'm going to hit you with tonight's presentation for about 35 minutes, and you guys should be good to go. All right. Hope everybody's doing well. Typical disclaimer stuff, you know the drill. CFTC Rule 4.41, hypothetical simulated performance, have certain limitations. Unlike trading in the real market, you can and will lose money unless you never get stopped out. You'd be my hero. All right, let's get right into this. So here we are. It is the second segment of the fourth quarter, and there are 54 days left in this 90-day cycle. But we all know there's a lot less than 54 left, right? So we know October's behind us. Segment one, done. And we're sitting right here, November 8th. We know this week is Thanksgiving. For a lot of you, this is shot. I'm probably going to be off on the 22nd. So we will do tonight, the 8th, the 15th, be off back on the 29th. And then we're looking at about 3 weeks. I'm not sure when we're going on break. I'll talk to Carr, but we're probably looking at 6, 13, and 20. And that's going to be it. Christmas is over the weekend, going into New Year's. And we'll probably be back. I don't know if we'll be back on the 3rd or the week after. But that's it. That's a wrap this year. So here's the deal. I could be a jerk and say, if you haven't done shit in 11 months, you ain't going to do it now. But I won't say that. Here's what I'm going to say. There's still time left, man. You can do something. Maybe you'll feel some urgency. Maybe you'll get moving. Maybe the fact that there's, about a month left, 4 good weeks. Maybe it's an opportunity for you to roll up your sleeves and get something done. I'm waiting, man. Send me something, do something. It's never too late. I'm busting your chops. It's never too late. But if you've been with me a while, you haven't sent me homework, you were afraid. I don't know what you're afraid of, man. You paid me to look at your shit and talk to you through this. So now's the time. The idea would be to get moving here, maybe build some momentum over the next couple of weeks, enjoy Christmas with your family and New Year's, and then get back going, or work right up until Christmas, take a couple days off, right? And then get back at it, take a couple days off for New Year's, 1 or 2 days, and then have some momentum going into the first of the year. You know, I'm going to give you the regular spiel, the enthusiasm curve, all the bullshit. Everybody comes out of the gate. I always joke around. I don't go to the gym in January. I work out at home. Why? Because there's a million people in the gym and you can't get equipment. It's a pain in the ass, right? And then February 1st, February 5th, I own it. Nobody there. Come and go as I please, get any machine I want without wait. And this has been going on, listen, my whole life. But since I've been in the trading business and talking about mapping out your life and stuff, I've noticed how cyclical it is. And it's funny, but it's not funny. Don't be one of those people. You need to remember why you came here and find the fire inside yourself and make something happen. It's never too late. There's always tomorrow. You can get up and start a brand new day. If it hasn't been going right for you, you're getting stopped out, you're frustrated, okay. Send me an email. Tell me what's going on with you. There's a solution for everything in this business. Everything. Maybe you don't have the right setup for you. Maybe you're not using the right tools. Maybe you're not trading the right pairs. The spread is too big. The broker's screwing with you. There's a reason we can work around it. But if you don't talk to me, if you suffer in silence, shame on you, because that's what you paid me for. I'm your coach. I'm your guide. I'm your mentor. I'm here. So yes, if this is hitting you right now, I'm talking directly to you. Send me something and tell me what's up. If you don't tell me, there's no way I could possibly guess. All right, enough of this. Okay, so we're going to start a fresh 12-week year. If you're in the middle of the cycle right now, segment 2, couple weeks left. Okay, get the book, audio only, listen to it again, or listen to it the first time. Start mapping out a plan for the rest of this year and for the first of the year. Plan on coming out of the gate January 4th, 5th on fire. and figure out a way to make a difference for yourself in the first quarter of next year. Stop saying, oh, next year is going to be different. How about January is going to be different? That's it. It's a short-term goal. I promise if you can make yourself better in January, it'll fall into February before you know it. And the same thing, you'll make yourself better in February, make yourself better in March. And next thing you know, you put a quarter together. All right. Don't forget to buy a journal. I'm going to stop talking about this shit, but buy a journal. We'll start mapping it out first of the year together, especially you new guys. All right. I got the submission. Absolutely love it. This gentleman, he just signed up. He's excited. He's sending me shit. And he tried pending order, and it's fantastic. So he said finally took a pending order, and trust it. She took forever though. I put the pending at 5 a.m. Apex, but was triggered in my New York session, and I took 30 fixed number to challenges back to positive. So he's in a challenge. He was struggling, and he trusted that I might know what I'm talking about after 23 years of being in the business, and he put a pending order on. All right, so let's look at his trade, man. It's pretty good. So to be fair, right? He's got the M correct, right? He's got coming off of the highs. This all looks good. Okay, so we're looking at the last piece where the book might have flipped. So, right, they consolidated on the low side of the AR. They flipped above, right? There's a little flip, and they stayed consolidating there. Then they threw a couple of pins, rejected the high. So we need them to take out this level to get a trade, right? This level is the critical level because this is the consolidation shifted up, consolidating in here. So what happens? He got a nice shift through here. Perfect. This would have been a good setup right here. There's a secondary M, double pins right to the top, refine the entry off of there, micro box, and he could have got his 30 right there. Then they made a deep V pattern, which I love. The deep V is fire, man. When you get those, you're going straight to profit, bro. All right, so look, this comes over. Here you are. You got the hammer. Refine this entry off of the bodies. It's too hard for me to see to draw it exact, but we're going to talk about that tonight. Okay, there's secondary M pattern off of the main high structure. So the high of the day is in. High of the day is in, right? They swing towards the low. They hit. This is a good target, by the way, right? Yesterday's low. Perfect. We know that there's thickness in the book right here. There's stripes. You guys doing the drills with me, drawing it in. You know there's some orders in here blocking that. So it hits there and rejects. All right, so this would have been a trade back to the high off of that, but railroad tracks, right? But this is a good reversal back to the high. If you didn't take profit there, then maybe this could have been a target. This would have been a smaller trade. This is perfect, though. If you see this right there, that's a good low side target. Okay, he gets the rejection, comes back in, draws out a secondary M, and he gets his plus 30 right here. So he had a chance to make at least 30 here and 30 here. That would have been 60 ticks instead of waiting for this to come all the way back, right? Nuance, staying inside the ketchup. And actually, you guys know I like the nuance inside better. I like this inside the ketchup better, right? Because you expect to bounce there. If you don't get it, then that looks like it's a reversal, but it holds at the high. This is a very good setup, layout, perfect. I don't know where his pending order went off. He says it's in the box, which is great, but I would have liked to have seen, right, come in on the 2. And if he did that, and then that's a tiny little M right there too, right? See that? Let me erase it so you can see it. If you're looking for them, they'll show themselves, right? There's an M, and there's a little tiny M, 2 wicks. But if he went pending off the first side refined, he got in on the first wick, never saw maybe 2 or 3 ticks of drawdown, boom, right to 30. And I don't know what this did the rest of the way, but he probably could have targeted the low, and it probably did that after that second attempt. All right, good stuff, man. Appreciate the submission. Keep at it, brother. Keep trusting yourself, right? I like what he did on the chart. He didn't believe it was going to hold. So he wrote right in there for himself, she's going to hold, right? It wasn't a hope. I don't know if it was wishful thinking or whatever it was, it worked, man. So there you go. Good stuff. Thanks for sending that in. Okay. Understanding price behavior. I want to continue talking about this stuff. I have the overlays of the candlesticks on some of those heat map charts we're going to talk about, right? So let's talk about getting your bias and walking through that. So the question is, right, let's walk through kind of what happened last week leading up to non-farm. Are you guys able to see this coming? Can you predict the direction of the news with this stuff? Absolutely. You can predict the direction of news, right? That doesn't mean you should be trading the news unless you build a position prior, a day before, as a swing trade, and you got your stops to break even, you want to let it run. You need to be far enough away from the news spike, right, that it doesn't take out your stop for one, and that it doesn't put you in negative territory and take you out, right? They slip your stop way past the stop level. Okay, if that makes sense. All right, so everybody's seen this. We had this last week. This is, right, coming over here the day prior. It's a 60-minute chart, by the way. That's my guide. That's where I'm at, okay? You're down here at 2098, right? So they're off the round number. What's the round number? 2100. Okay, you get, this is basically Asian consolidation over a couple of days, right? This would be the high swing and the low swing. Bring it in, bring it in, bring it in, go into consolidation, run some high side stops. If people are here, go in, make the perfect W. Okay. Now, I talked about when you take the wicks off, you should be able to slide this whole structure under the next structure. And it's obvious you can do that. So you would take these pins, stretch them out into the future, right? This happens to be the high swing. There's the tracer. We know that the dealers put thickness in the book, a couple of orange stripes, red stripes, to make sure that level holds. This happens to be a 60-minute 50 bounce trade. And yes, they're good for 50. So there's your W, piercing right through yesterday's high. So now, understanding that this whole structure, right, all this stuff fits under here. So now we have two levels of price rising. Okay, so how do we know what's going to happen tomorrow? Okay, day one, day two. We don't get a lot of rotation. We don't get a nice uptrending move. But what happened is this thing developed late. They made the W anchor almost towards the close of the day, and then they ran it through Asia and held the high, came back, did not take out the low, made their first leg, made their second leg, but they did take out the previous high. Okay, right? We talked about this stuff. They take out the high. Structurally, they cleared the book for them to go higher. Okay, price fades off of the high, even though it cleared the book, ate some of the orders. And then what does it do? It consolidates. And as soon as the news comes out, right leading into the news, here's your low swing. Here's your low swing, right? W, you're above the average, you're above the average, you're above the low, you're above previous high, still holding above. Price paints a W, starts to shift up, and then right here before the news, right at the yesterday's high, they trigger it right out of there, right? Day one, day two, day three. Now what happens, right? We get a little bit of a pullback. We expect that. But the news gave you a nice run up, sideways consolidation. Then they start trapping high. Here is the previous day's high. And what do? They pin right through it before they drop. They give you another M structure, right? Hit the stops, trap high, and then they give you this M structure. This bar looks like it might go higher, but we know that we've had a nice run up. Price is overextended. They run the stops. Anybody short here. They drift up a little bit and they get what they're looking for, and then they hook it back, take it out. Does that make sense? Okay, now, in your mind's eye, what should this be looking like in the book? What would the book look like, right? The book would have pressing, right? They would cap the high swing, have an order there, have a stripe here, right? Price comes through the stripe. You definitely have a stripe here that carries in off the high, right? We know that the blue tracers are areas where there's thickness in the book, where there's a bunch of orange or red or even yellows. Okay, so rather than try to figure out what this may or may not look like in the book, I overlaid the candles on the actual book for you. So let's take a look at that. Okay. So here you go. This is what the book looks like with the candles. Okay. So here's the perfect setup, right? This happens to be the same as the 50 EMA. It's VWAP, volume weighted average price. But the EMA, the 50 EMA plots exactly right here. Perfect. Okay. So now what do you got? Look at the time. Okay. 8 o'clock, 9 o'clock, we're changing sessions, right? We're rolling over into the next session. The dealer spikes it and kind of consolidates into the changeover. Then what happens? 9:30, he makes a run at the high and he hits and then spikes out of there clean. Right? Now, this is what throws people off. This hammer looks like reversal long. But this is a turn bar that's created by, look at all those bubbles in the book, look at all the color, all the way down, color all the way down into the pin and pushes it all the way back up. So since we have a downside bias, why? Price is trading below the water. Price is underwater, price is short, right? We have the high of the day over here. We're looking for a pullback. High of the day, shift below, right? This would be the swing they need to shift through, right? Look at these tracers, black in between, and it shifts right through there clean. Okay. Then it makes the first hook back, right? There's a V pattern. I want to refine the entry to try to get something in the future. So I'm looking at tops of the body, wicks, right? This wick, this is a little lower, not terrible. Okay. So I'm going to take this high swing. It's already drawn for me. See the orange turn yellow? That's the high swing right there, right? Okay, why? That's this level plus 1 pip spread. Okay. And then I want to use these tops of these bodies. I want to get down in here and get this body, right? And then draw it and encompass those bodies, stretch it out into the future. Now I'm waiting for the V. I need this level, this thickness in the book, orange, yellow, orange, orange. I need this stuff to get absorbed and eaten. These guys come out of here and push it hard. They make the turn bar, right? They cap it. 3 orange stripes in the book. They cap it, force it back up. Price comes right back to the level, and I'm in right here. And it happens to have the 50 EMA right inside the box. Lights out. There's my fill. Stop can go 10 ticks above. We count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Stop could go right around here. Okay, and that's it. You're risking 10 pips to make 30, 40, or 50. 3 to 1, 4 to 1, 5 to 1. Those are the trades you can afford to lose. And as you get better, right, you're risking 10. As soon as you get the shift out of there and you know you got it, you go to -5. They shouldn't come back. If you got it right, they shouldn't come back. It's over. And you'll start seeing that as you execute it and do it. Right? You just follow the candles down, right? Notice the pressing. There's some orange stuff out there in the future, right? They get through this, the low swing. Okay, the low swing is pressed. These stretch out into the future, right? Let me erase it so you see it clearly. It's very important. Okay, there's orange right there. There's the wick. We can use these wicks right here. This swing low, stretch it out into the future. This out here. And notice how price comes back up and flat prints right under that, right? It breaks it, flat prints right there, and then they continue down. There's not a good clean entry in there, but that is a form of a V, right? It's flat. Why is it flat? Okay, have you ever seen flat prints? I talk about these all the time, and they're amazing. Flat print is, look at all the orange, yellow, orange, yellow, orange. That shit ain't getting through there. It's a lock, right? And if you can't see that in the book, if you don't have the book, you understand the flat print when they took out the low, right? 2 bars into the low, flat printed. Okay, you can approach this one of 2 ways. You can sell here or sell in the consolidation, or you can put a sell stop right below. And that'll put you in as soon as that candle spikes out of there and gives you the rest of the ride. And it's getting late in the day. If this was shift this over to the middle of London or beginning of the US session, it's a viable trade, man. Obviously, it's a viable trade now, but it's more viable if it happens over here or in London. Make sense? right? And then again, the delta. The whole time, book is sell side. The net cumulative contracts by the dealer are sell side. Regardless of this and this, they don't give a shit, right? This doesn't matter. They're accumulating and they're heavy sell. So the book is heavy sell side. Does that make sense? Right? They would be sell side. Their net orders, net delta, which is the net cumulative buy and sell orders, are net sell side. So the book is net sell. And it doesn't matter when you have these upswings, it's still net. They're accumulating sell side position. And that's a chance for you to take advantage of that, right? 1, 2, sell it, zero draw into profit. Easy run, easy. All right. I think this is another angle. Let's see how it played out the rest of the way. All the way into the lows, everything pressed together. When you squeeze this together, it's interesting, right? Because you can see the patterns and you see where the orange was in the book, right? Notice how it's lighter on this side than it is on the side they're pressing it down. It's orange all the way, right? Notice how there's very little liquidity, if any at all. Look at those little bubbles popping in that bar that gets through the level, right? It's just one quick bar, but it's small sell orders into it. And they just push it down, and then it's back and forth, right? Smaller orders, retail stuff, retail stuff, retail stuff. They get it back up there, right? Orders in the book. Maybe some small stops, right? For sellers or people trying to buy and go long, thinking that's the reversal. Then you get that nice V pattern, and then that's it. Look at all that orange thickness. That ain't getting through there. You know that shit ain't going through there, right? Just by drawing this and understanding that this exists, that this is part of what's going on behind the scenes, thinking from behind the screen, not looking at it like a retail trader looking at candles. You're looking at what happens to make those candles form. Makes sense? I hope this makes sense to you guys. The idea is to see it from the backside, to imagine that these lines are there, right? These turn bars, you ever wonder how a turn bar was created? I always wondered. I always wonder how they get these vector candles, right? Have less liquidity. The book's kind of grayish. They pull the liquidity out. There's hardly any there. Then all of a sudden you get thickness in the book, all these levels, top and bottom, creates that press, right? Then they cap. Price comes up and they just, it's not much order. It's gray, kind of yellow. All of a sudden it gets there and they throw a bunch of orange in the book and they cap it, right? A small block of orders, right over the top of a candle will be a cap. They cap the price. I call it capping, right? Look, make this turn bar right here, heavy orange. Nothing in the book till the bar got there, right? Notice that. Let me clear it up. Nothing in the book right here until the bar got there. As soon as the bar got there, they go, nope, that's it. It's not going. And they put a little block right there and they created that turn bar, right? This is the bar that starts it and this is the bar reverses. So this bar comes in, they cap it, and they hold it, and the green tries to get down there, it wicks, and then they reverse it out. That creates a turn bar or a turn sequence, 2-bar reversal, 3-bar reversal type thing, right? And then this is your secondary M. This would be your high of the day M. This is your secondary M, right? So you got the HOD, and they shifted off the HOD, right? It had a very mild stop hunt, and they shifted below. As soon as this closed below this and below the 50 EMA, you got something going, right? The 50 EMA kind of hung around with it because price, this is technically flat. This is accumulation. They give you the first leg. Then you're sitting here. There's your turn bar, right? It comes in, makes a nice clean turn, and they shift it, and they go, okay, now we got it. We took out this level. We absorb all this red and orange in the book and yellow, and now they make the turn back, and there's your V spacing that you're looking for. You sell in here every day, twice on Sunday. Even if the market's closed, I want you to sell that shit. It's there. And there's your trade, zero draw. 5 to 10 pip stop, you'll get better. The goal is to get it within 5 pips. And that'll come. All right, good stuff. Okay, same setup. What I wanted to do is I wanted to look at the chart, talk about how to refine the entry. Okay, so this is the same type of thing. So what do you got, right? Price comes above yesterday's high, right? It hits it, it goes higher. It takes out this level, but you're waiting for your anchor to form. You need your anchor. As soon as this sweeps below, same type of setup we just looked at, right? Goes here, pulls back, throws the wick. There's your your shift bar to take out this level, goes back and takes off. Now, the blue tracer's right here. And I love the tracer, man. What's in the book with the tracer? The stripes, orange, right? Bricks, blocks, whatever the hell you want to call them. Stripes. Okay. So we're trying to refine the entry here. So initially, I see this apex or this nadir, sorry, and I'm going to draw here. I need the book to flip below this swing. You could even just take it like this and stretch it out with just some kind of line in the sand to let you know. If I get below this, I got something. Now, it gives me what I want, and it actually pierces below here and starting to show rejection on the high side of my tracer, on the low side of my tracer, but it's trying to get above and it can't. You get a bar closes above and it looks a little suspect, like maybe it's going to go. Then this bar goes all the way down, rejects, and ends up right in the middle. Okay, then I still don't have anything yet, right? The 50 EMA is right here. I don't have anything yet, right? We know the trend is up, but these are starting to get close together. They're starting to gator over, right? Still don't have anything. I just have a couple of bars printing in consolidation. Let me clear this up for you. All I have is this. I have a high and a low swing. Don't have anything yet. When this bar pierces below the low, and if you notice, it takes out this shit over here, takes out this stuff right here, and it closes below here, and then starts to come back. Now I have something. Now I'm looking for a V formation, right? If this went up here and then reversed from here, I missed it. That's life. I want a nice, clean, deep V, right? Because the V makes the nadir for the M. So now I want to refine the entry. So I overstrike my box. I overstrike my box with this box. So what do I want to do? I want to get the top of this body, the bottom of the spinning top, right? I want to encompass the wicks, maybe get some of this over here, maybe the tops of these wicks or even the bottom of these wicks. So now I'm going to overstrike my existing box that I drew, and I'm going to tighten this thing up. And I'm going to come in off of here even. All right, now that's a good area to sell because I'm looking for the high swing. But I don't know. Sometimes it stays right there even. The box is tight. It's less than 10 pips. I want to put a pending order front of the box. Or if you don't like it because of the tracer, you want to sell in here after it rejects out of the box. You still need to draw the box. But then you need a close down, right? You have 10 minutes to make a decision on this. You have an inverted hammer and a spinning top type trade, right? It's trade. Both of them closed below the tracer and below the 50 EMA, right? So what does that mean? You're underwater, downside, sell it. And there's your set. You could have traded this one as this, right? And there was 25 pips in there. This is the better setup, and this offered you your run for the day. You could have targeted the Mayo or just took your fixed number, whatever it is. 30, 25, I don't care what the number is. It needs to be fixed, and you need to work it, and you need to work the spreadsheet. That's it. This is how you refine the entry. So now, the idea is if you're refining the entries and you're using sell limit orders in this one, SLOs, right? Or if you got the rejection and went market order in there, that's okay too. This was a good trade. Even, I hate to say even this one, but you could have waited for that bar to close. The problem is I want you to get a really good grab because I want you to grab as close to the high swing as you can. So I understand waiting for this. So your stop's got to be maybe right here on this one. And if it closes back above the tracer, then you got to make sure it doesn't take out this level here, right? Which is the bodies and the wick of this, because this is the last swing, right? Notice how this swing failed to take out this swing. It shifted, came back, did not get above this swing. You're still good, right? You want to see a nice high rejection candle. You want to see like, okay, let's say it goes above, but it needs to end like this in a wick, right? This is the line in the sand right there. Will it close above? We know there's thickness in the book and we know they can penetrate that. But the issue is, will they close where we need them to close? They need to close below the tops of these bodies. Draw a line on those bodies. I don't care. Draw a line and look for the close, right? Then these right on the tracer close below 1 time, 2 time, You want to take it on the third, that's okay when it's shifted out of there. But you also have your ketchup nuance below the underwater and below the tracer. It's a pretty damn good trade. But learn to have the guts to take the risk over here. All right, makes sense? Okay. You're going to get a really good pull and you would have zero drawdown, man. And the thing that's kind of crazy great is, look, I know a lot of you hate drawdown. It's easy when you're not in drawdown to not second guess yourself, right? Okay, erase that shit. Hold on. But what's your drawdown? These are 5-minute bars, by the way. What's your drawdown? You went limit order right here, front of the box. You had a wick of 1 or 2 pips plus the spread, maximum, depending on the instrument. I think this was pound dollar. You had a 4-pip draw, 4 pips drawdown, right to victory. Plus 30, plus 50, whatever you're going for. Right there. Okay, so this gets consolidation-y right here. I don't know if it ended up hitting the EMA that day, but until into the Asian session after the rollover. It's late in the day. But that's easy stuff, man. Easy stuff. All right, and this is your apex nadir trade, right? Trying to find the eraser. Can't find that. Here we go. Where is it? I don't know what happened to it. Okay. So this is your M, right? That's your nadir. It's just not formed as clean as we like. We like a nice V1, but it's decent because this was railroad tracks. I like to see it go down and hang out like that, right? Come up like this and maybe a couple of bars in here, a little spacing in there. But nevertheless, this is the high swing of the day, trading above yesterday's high. And it comes back below, right? So they trap high side. All this stuff is trapped above here, right? Everything in this box, right? How many people went long here? Look, not understanding about anchoring, right? They took this bounce here, went long. That's okay, but they didn't realize what was going on. And then it got trapped. As soon as they get going, right, they shifted, took out the stops, and trapped everybody here, consolidated, shifted it again, and reversed. So you have to know what you're looking at. Tracers in the picture, you need the anchor formation in first, a shift candle below the nadir, give you direction, and then there's your V pattern, which we know what that looks like in the book. It's amazing, right? This is what it looks like, and this is what it does. 1, 2, all that money in front of you with very little risk, right? You could either trade 10 lots with a 30 pip stop, right? Or you could trade 30 lots with a 10 pip stop. Right, stop loss here. It's the same math. It costs you the same money. But this offers a much, much greater reward on the win side. As soon as you can just doing that, right? Refine the entry. As soon as you can get to this bottom equation, your numbers are going to grow exponential. Then you plug this into the spreadsheet and it's game over. You'll get qualified. You'll do whatever you need to do. But until you take the leap of faith that you're seeing these illustrations every single week, that this shit is going on behind the candles. These orders build the candles. The candles are a representation of what this book looks like. Do you need the book? No, you need to understand the candles and how they close and what they're doing. It's more important to understand the close and how they take out the levels more than it is the actual candlestick pattern. The only time a candlestick pattern becomes necessary is understanding when you're trying to get in. Right? This is absolutely a turn bar. It's a hammer. It's a long signal. But if you went long here, you're going the wrong way. Right? Because here you have a solid candle close, green. Right? This is long, 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 and you're going to sell right there at the very top of that candle. And everyone's going to tell you, you're deluded. And you're going to say, what was it? Deluded like a fox, baby. There's the run. Okay? Ends up being a railroad track, but this is the perfect entry. Do you think that when you start looking at these patterns in the book, do you think they give a shit that the blue tracer is there? Do you think they give a shit that they closed on this candle. No, they don't care. That's what you see. This is what they see. They see order flow. They see orders coming in and what their accumulation is and their net delta. They don't give a shit if there's a tracer that Steve Morrow put on a chart from 20 years ago. Blue tracer. Don't give a shit. It's what's going on in the book that creates these patterns. The stuff that I invented or created or used, whatever it is, had programmed, whatever you want to call it, the stuff that we have as a group in here is representation of these areas in the book, because I didn't know what the book was. And I was taught how the book works, but I can never see the book. When this tool came out, it was a game changer, man. It's amazing. So now what did it do? It gave you, I don't know, I guess it gave you proof that you weren't deluded, that all the people that said you were nuts and sick in your head and didn't know what the hell you're talking about. Okay. It's validation, I guess. Do you need to go out and buy the book? No. Can you buy the book? I don't give a shit. Buy the book. There's already 100 people that asked me this week if they should buy the book. I'm going to tell you the answer is no. It has a learning curve. It's hard as shit. I've been looking at this since 2014. I've had Bookmap, I guess, for 9 years. Right? And I couldn't figure it out for the first couple of months. I told you the whole story until I squished this shit together. And by the way, they didn't have the candle overlays when I first got it. Until I squished this shit together and started seeing M's and W's in there, then I realized, wow, that's something. Then I started noticing that every time they flip the book, they make this pullback in a V or a micro M pattern, an A-frame. That's where the finger roll, I called it a finger roll because the good ones fit your finger in it. Right? The good ones have spacing. The good ones have spacing in them, and they make it, it works, man. It just works. I don't know. All right. Let's see what else we got. Okay, we covered that. All right. This is some trades that went off. I think I'm going to end it after these couple of slides, man. But I wanted you to see the chart and what's going on in the book. And I want you to see it's SSDD, man. Okay, so this is the 6B futures contract, which is GBP USD in the futures contract form. And what you got going on is you got your Asian consolidation, right? Asian range is, it's R3, but it's 30 ticks wide. Okay, what's the direction? Down, down. Price below the water, down. Price under ketchup, down. Okay, they shifted into the low. They created a block of orders right here. They're fishing in there, but can't get below. Finally, they give me a very decisive move below. They consolidate for a couple of bars, and they run back up. Now, that's when I like it. So here's what I'm looking at. I'm looking at the AR low as a number. I'm looking at this pink line, which is a value area high, which is just some profile bullshit. It's not necessary to worry about it because you're going to get the same trade without it. Okay, so I'm looking for, coming out of Asia, I'm looking for a V pattern, hook back. I'm going to have a rough idea. I want to deal from here. The AR low, when they take out this level over here and this level over here, they clear it, they clear the book, and they make a nice run back. So then I get this first railroad track pattern, right? Rejected here. This is how I'm going to refine the entry. And this is good because I got a lot of wicks and stuff to lean on. It's like, thank you for the gift. I'm going to lean right there, and I'm going to lean right here at the top of this bar. I'm going to box this in and stretch it out into the future. And they're going to come back, and I'm going to deal right there. Right between the AR number and the pink line. And I'm going to get a pretty damn good fill because that yellow line is the highest amount of volume traded on that candle at that point in time. Right? That's the point of control inside the bar, and I'm right in front of it. I don't know it's a point of control at the time, but I'm trading below this point of control. And if you notice, they finished even. See the point of control there and the point of control there? Okay, as long as that's included in my box, I should be okay. And I'm dealing right in front of the point of control on the green bar. And it just so happens to hit it again. Absorption and hitting the stops, absorbing the orders. The point of control is the highest volume exchanged on a bar, on a time frame, over a period of time. And there it is. That easy trade, stop right there, call me later, plus 30. It gave me 32. I took plus 30 right in here. All right, now, here's the thing. If you're going for 30 or 40, if you isn't getting the entry with zero draw as important, because this was only 32 ticks available. If I would have got entered down here going for 30, I would have got subjected to this crap. The entry is the most important thing. I know that's like, oh, duh, no kidding. We're in the trading business. But the location of the entry, you want to get a really good fill very close to the edge as possible, because then you have the entire impulse leg in front of you. Right? We know that GBP is good for about 30 to 35 pips on an impulse, right? Look, from here to here, from here to here. Those are about equal measures. This one just took longer to develop because it kind of traded sideways in between, right? These bars right here are low volume, very low volume. Look, very low volume bars. So they had like a push, a space, a push, right? A push, spacing, another push. It took them a while to develop the same run that they did in session. This is Asia, and 6B doesn't trade very much during Asia. So you have this hook back, and then you get that nice drop. Had I gotten in, whatever, if I would, let's say I would have got in off the hammer, right? I didn't trust myself and I got in over here. My stop's okay here. That's not a bad trade, but I'm probably looking at about 20 pips. Maybe 25 ticks. I didn't get my number. And then what happens is I'm subject to sitting through this shit and get the reversal. Then I got to squeeze myself out with 20 when if I just take my time and get a really good entry and focus on the entry, I'm going to get my target a lot easier without a lot of stress. I want you to notice too how the 50 EMA is rolling right there and it pins it, right? It missed it the first time and then pinned it the second time. All right, let's look at the heat map on this. I'm going to wrap it up about 45 minutes in. Okay, so this is the exact heat map of the setup I just showed you on here. This is this. No candle overlay. You've seen the candles already. Okay, so look what we got. Asia, right? There's Asia. There's the 50 EMA. Now I want you to notice something pretty cool. You notice how the orange draws the boxes for me. The orange draws the boxes. So I literally can come, take this box like this. I could take this break right here where the orange is, and I could take this little order bubble and I could stretch it out into the future, right? As long as this closes below this, that's my V pattern, right? I know the bar, what it looks like, right? It was kind of a vector bar, and then I had a couple turn bars here, a micro W, and went right back into the level. You get your stop, right? You already know where it's going to be on the book, and you got all this orange in here. A good place to put the stop would be right there. Right, VWAP is a little bit further away than the 50 EMA. Then price goes down and makes 3 hits to the low. And you notice it here. You notice it spiked a little lower right there, right? And that's the bubble that stopped that. So is this a rough idea? It's probably the low of the day. Well, yeah, look, orange, red. You could draw this shit out like this. Look, orange, red, orange, right? Before it did that spike, orange, red. So what happened? They caught people going long and they ran their stops. But that orange and this red with this deep color in here, and then down here they got insurance. It ain't going through this. That's the low of the day, man. Every day and twice on Sunday. Okay, and then this sets up into another trade I'll discuss next week. All right, we're 45 minutes in. I'm going to end it. Thanks for coming, everybody. Send me something. Do some homework. Get your journal going. There's still time in the year to get it together, man. It's not too late. Have a great night. See you next week.